Hey, welcome everyone. This is Drippy to Hard, your source of options drip on a daily basis. On this channel, we talk about some of the most exciting setups based on the options flow, technical analysis, pattern analysis, current macroeconomic events, and the market structure. Keep in mind, I'm not a financial advisor, so anything I say, just take it as a light, opinion, and you are responsible for managing your risk and taking profits. I may or may not be in any of these positions, and let's look at what's going on in this market. Clearly, we have a lot of tensions in the market right now. We have solid case for bears. We have Dixie, which is the dollar index at 103.9, which is insane to say the least. It's a multi-month breakout. We haven't seen these levels on dollar index since 2017, so dollar is basically highest since 2017. And we have so when dollars high, commodities tend to be weak, and that's why we're seeing like significant sell-off in steel, like X is selling off, and CLF. You can see them commodities are performing weak, and investors are a little bit cautious here, and they're just worried about what's going to happen next, and that's why 10-year treasury is also looking at this monthly chart for 10-year treasury. Look at this. We had this kind of like a parabolic regression channel, and we broke out of this channel, and it's retesting the previous resistance area. Now this is a big resistance area in my opinion, because it's just like anything else with respect to TA. This is approaching a resistance area, and what happens, every time you see it approaching, in the past we have seen whenever it approaches right here, it kind of broke above this level, went maybe 5 or 6% up, and then broke below, but it took a couple months. So I'm watching it. Let's see what happens. It's definitely concerning for tech stocks and high beta names. Yields up means that they're expecting interest rates to increase sharply soon, and they're pricing in that with respect to the yields. And I'm not going to go in depth into this. This is a broader topic, which maybe in the future I'll cover in depth. But yeah, just with respect to the beta names, doesn't look good. And then also we have Bitcoin, which is basically in a bearish mode. We have fired the daily skews to the downside on Bitcoin. This bear flag has broken down, and we are basically testing this support area. If it break below $30,000, it's gonna be nasty for Bitcoin, and I hope it doesn't happen for the sake of investors. And let's see, we get a double bottom, and hopefully this is a longer range in which Bitcoin consolidates, and hopefully it stays at $30,000. Could be a good dip buy opportunity, I think, if it dips here. So names like Coin, with you could see it open gap down, and I covered Coin in my last week video, and I told that Coin looks super bearish, and look, it just you could have gotten in Coin on the break of this level and made some money, and earnings are coming soon as well. So it will be interesting to see what happens in the Bitcoin and crypto world. So let's move on to our normal markets. SPY, as mentioned in the last week's video, we have this head and shoulder, but couple things to note here, that I'm observing kind of like some dip buyers here coming in, stepping in. You see here, every time price kind of finds around this area, we see some kind of pressure. So if this area cannot hold, for example 405, we are basically open all the way down to 400 and possibly gap fill to 395 here. There is a gap here at 395, around sorry, yeah, right here you can see from 398 to 395. So there's this is a demand zone though, so let's see what happens if yields break out and then sell off from that level. We could see market. It's always about risk reward in the market, right? What's risk reward right now? The risk for puts is high because we are basically testing weekly and monthly support levels on SPY, and it's SPY has been on an uptrend in a while, so risk for puts is a bit higher than calls at this point of time. But that doesn't mean that market doesn't care about calls and puts, right? Mostly. But let's see what happens. It's all based on the geopolitical events, and we have a proxy war situation between US and Russia via Ukraine, so which is concerning. And then we have these yields rising up, inflation is rampant, and other countries like India, they're doing surprise rate hikes. So overall, bearish, but let's move on to some of the setups I'm watching. So first one is LMT. Now, given the situation with the war, and LMT looks like a good dip buy in my opinion, because look at this. LMT has been in a super bullish mode ever since 18th October 2021, just ripping nonstop, and it's been consolidating for a while in this area. So let's go to the lower time frames here on LMT. So on the 4-hour, this is, by the way, a new indicator, SETI ribbon. So basically these crossovers are the point where I'm interested in adding for swing play. So in this case, if once this on the 4-hour you saw the crossover, you start to see how prices declining. So now we are seeing the crossover to the upside. So this does provide a good risk reward opportunity, but we are approaching so in my opinion, let's go to the lower time frame on LMT here. So clearly it's on the lower time frame we have crossed and flipped above. So on the 2-hour for LMT in this past, when it flipped below, we had a significant sell-off. So I'm thinking that if we can see a significant rally in LMT given the news, and also on lower time frame, notice here that we are seeing accumulation. The green bars are stronger than the red ones here from ever since the dip has been being bought, and we are approaching a supply area at 452. So above 452, if we can go to the supply, I would love to add maybe 460 call for June expiration, or maybe closer expiration, depending on where it breaks out or whether it pulls back and consolidates. I would love to add around anywhere between 443 to 445 it can hold, or if not, then anywhere area around this area, the consolidation base here 441. So let's observe this a little bit of more. Even if we have consolidation here, that would be like really good opportunity to get into it. And I'm already in this one, a little bit closer expiration 455 for May 20th, and I got in on the break of this level. I've been watching this chart for a while, so looks solid. And let's keep this on watch list. If it breaks above 453, 452, we don't really have a lot of volume in this area, so it can definitely go to 460 in a matter of couple of days or even a day. So that's the first one. Let's check the flow for LMT. So there is not much with respect to flow, I would say. Right now it does look like calls are being sold for like a year out, so the flow doesn't really have anything significant. So that's why I'm saying that let's just watch it and see what happens. It's more of a macro play for me right now. And let's see what else is there in the market. So next setup I'm gonna talk about is Oxy, continuation from the last week. This was the setup of the week for last week, and look at the break of 58. I got the 60 call, and ever since I've been in this, and it's really good. setup. I mean, energy sector itself looks amazing. Energy broke out. It's making new highs, and it's all-time high right now. So excuse me. So it's all-time high, and energy. I mean, like the volume on these breakouts is insane. All over this, you can see accumulation pattern here. Um, ever since we had this consolidation phase here, so looking solid. Energy looks great, all-time high. And let's see what happens next with respect to. So I'm still in Oxy. I'm still bullish. Oxy flow looks solid. I mean, the next level for Oxy is 66, and then who knows, it could even go to 68. And the flow is extremely bullish for Oxy. So they are I mean, like, we got in early, but they're still, let's look at this 1.62 million floor order for 65 calls, 17th of June. And I mean, the flow is 85% bullish with the bids on. So sold, sell, ask, all combined together 85%. And the strike being targeted is 65. And also we have like 70, 67.5. So 65 is the main one with a lot of premium on it. And it looks really good. The setup looks amazing. And with the sector so bullish, Oxy is the leader in my opinion. But keep in mind their earnings coming soon on Oxy, which is basically on 10th of May after hours. So that's one thing to consider. And if you are in calls, I would suggest to hedge it with cheap out of money puts. Let's say you get 55 puts weekly just to hedge your position, or you can get out completely and then just wait until the earnings are done. So yeah, I mean, after earnings we have seen it pull back a little bit, so we can see that. So you can buy the dip. It's already extended since the entry. So it is what it is. Energy names really don't really care about EMA as much. They just look at this last breakout, just kept going. I mean, it can go on. So Oxy, LMT. Next one I want to talk about is CF Industries. CF is basically, we have process and chemical agricultural industry. And so first of all, real quick, on 4 hour the EMA is flipped. The ribbon has flipped. So at least short term is bearish. And with respect to earnings now, what they announced was that they are roughly expects a US blue ammonia production new facility planned with Mitsui and Co. to cost about $2 billion. So they're using their cash reserves in this inflation environment to put it in this new facility. That's not bullish for investors. And investors like to have cash reserves, and if the cash reserves are not there, we might see sell-off on this one. And also notice how we have this kind of like pennant formation here, more or less, but I'm leaning bearish because of this bear flag, this significant sell-off on the earnings day. It ripped and then sold off, and now it's just been consolidating. So we can even manage our risk super tight on this name. You could just have a risk stop loss of 101 or rely on price action. And the flow is super bearish on this one. Look at this. 17th of June, 92.5 puts, and calls are being sold as well. So 92.5 put is being hammered on. I mean, price is at $100 when these guys got it. So this could potentially double these premiums. You can even get closer expiration. If you're watching the chart, you can get closer expiration. But if you're not watching the chart, you could get the further out expiration and give it some more time. Everything depends on if you're watching the chart every day or not. Personally, if you are watching it every day, I would suggest to wait for the break of 95 area, or wait for it to kind of like get rejected at this 101 area, and then take it from there, because it could consolidate here for a couple more days and then sell off. So buy some time on this one. So that's CF. So we covered LMT, Oxy. So bullish on Oxy and LMT, bearish on CF. And then the last one I want to talk about is CLX. So CLX, as shared on my Twitter, right, that we have bird flu situation going on in farms, and they're basically instruction by the U.S. FDA, U.S. Food and Drug Administration, that you need to sanitize the farms and have a lot of precautions. So notice how SPY has been selling off from last couple of days, and this name has just been ripping. So, and there's this gap up. So it could be a good gap up play. Now this name, I'm not gonna swing this one. It's not a really good swing play in my opinion, because of just how this chart is. So if you wanna swing it, then buy the dip, and that area would be around 146. But if you're trading breakout for this gap fill, then don't swing it. Just trade it intraday, close the position, and get out. And we don't have a lot of significant activity on this name. Let's go to the bids here. Yeah, so let's go to the out of money only. Oh, sorry, I'm on the CLF, my bad. CLX. Yeah, so there's 15th of July call for 155, 68 days to expiration. And this was a premium price of $27,000. And that's the only order was there on this on Friday. So it's not a liquid name. That's why I'm saying be careful with this one. But it is, the chart looks really solid actually for this gap fill play. And I would personally like to kind of add it around 151 if it can pull back, or wait for the break of 155.5. That's the area I'm watching for the break. So, and one final one, a bonus one I want to talk about is Ollie. So Ollie's earnings are coming soon. It broke below this. I mean, it's been on a clear downtrend. I mean, this it's been on a clear downtrend. Broke this level here, and on the 4-hour, we broke this trend line support. So kind of like a bear flag, and the flow for this one is bearish as well. 47.5 put being loaded for again 17th of June. But keep in mind of the sector, which is XLP, and right now XLP is basically in middle of deciding where it want to head next, because we have seen that this area is holding well, this 76. But if it breaks below, let's say 75, things can get nasty for this sector. And right now it's just a retracement, after this huge rally. It's just a retracement to this it's in the golden pocket, right? So let's just watch this sector. That's why I didn't keep the Ollie in my main watch list. But yeah, apart from that, just be careful. Again, we have CPI data coming on Wednesday. We have a lot of economic data coming on from China, I believe, on Monday. And there's some couple other things. I'll keep you guys updated on Discord if you guys are on Discord. And good luck, everyone. I'll catch up later.